So thank you so much, Irene, and good evening to everyone. I want to welcome you to this presentation. Thank you, Irene, for the remarks and for hosting us. If you have interacted with Irene, you will notice that she has a very interesting and inspiring journey. The other day, we were traveling with Irene to Naivasha and for presentation, and she was sharing a story that as she grew up, she knew she wasn't quite sure about her journey, career path, but what she knew was she was not going to be a teacher, and life happens, and here she is. So first of all, I want to commend the attendees. We have quite a number of you. I know it's a Monday and you've been up and down, but nonetheless, you've made to come here. Now, as a way of introduction, I want to share my screen here. I hope it's visible to everyone. Just a second. Irene, I don't know if you can view my screen.
Hi, Jafika.
Okay, just a moment.
You're
okay,
good.
There you go. Okay. So first of all, my name is John Koech. I hold a bachelor's degree in sociology with IT from Maseno University. I have a certification in ACI, TDBK, and SFI. I previously worked in NATO military base that is in Afghanistan. And then I joined banking in 2015. Currently, I'm in investment banking. I was awarded a recognition certificate by the USMC, that is the United States Marine Corps, in Regional Command Southwest of Afghanistan. I was also once an employee of Q3 2018, that is in Bank of Africa, and a member to member to the board of trustees, that is at Bank of Africa. I have said I work in investment banking. I work with Investment and Facility. That is, we do wealth management and portfolio review. We also do advisory. It's a journey we want to work with you as potential investors. What I'm here today is to do an awareness on the Treasury bonds and bills. And I do believe by the end of this presentation, you'll be able to understand what a Treasury bond is, what a Treasury bill, and even what an equity is. And you're able to even to know how to invest on these assets. Now, moving to the next slide. So this, of course, this presentation is brought to you by the Hallmark Institute of Professionals, the Center for Transformation. It's, of course, with the assistance of sponsors like the TIBU, NWealth, CBF. We have Sky and Beyond, BF Suma, and Passion Biz. Now, this is our outline of the presentation, and I would, my mode of presentation is participatory. I would wish that you could ask questions along. So don't mind to stop me if you need a clarification to something. You can also utilize the chat if need be. Irene, you can assist me to keep track of the chats. So this is our presentation outline. One is what is a treasury bill or treasury bond. We shall look at the benefits and the risk of a treasury bond or a treasury bill. We will look at bond prospectus. That is, what is a prospectus and what does it entail or what does it cover? You will also learn about the tap sale. You know what it is. As you go investing in treasury bonds, you will come across these terms. You will learn how to purchase treasury bond and bill, which is important at the end of this training. Something interesting about Treasury Mobile Direct, that is a TMD. Then finally, the question and answer. So we move to treasury bond. So the question is, what is a treasury bond? I have tried to make this presentation as simple and summarize it in a manner that you can understand and even break down the terminologies. So what is a treasury bond? It is a security issued by government to finance its expenditures. So as simple as that, it's a debt whereby the bond issuer, for this case, a borrower, issues a bond to the bondholder, that is the lender. So when you invest in a treasury bond, you are basically lending to government in which you expect a return at the end of after every 6 months, because it pays coupons or interest after every 6 months, and at the end of the maturity period, you receive the principal. So these securities are issued monthly via an auction, and they vary in maturity, that is starting from 1 to 30 years. So they are issued monthly except for infrastructure bond, which they are issued on ad hoc basis. So these securities, you can check them at the CBK website and select the one you would wish to invest in. Now, bonds, they pay interest semi-annually. That is, after every 6 months, you receive interest. This interest is known as a coupon. So some bonds are taxed and some of them are tax-free. The tax-free bonds are infrastructure bond. In a short form is IFB. The ones which are not taxed is, which are taxed is the FXD, the fixed coupon interest bonds. Now, something to note is the value of the bond fluctuates either both up and down. So, and this majorly depends on the interest rates, which is normally regulated by CBK. So that is by and large the definition of a treasury bond. It's simple. It's a debt security issued by government to finance its expenditures or operations. Now, I want us to look at the benefits and the risk of treasury bond. Of course, like any other investment, it has a risk and the benefits as well. The benefits. What are the benefits of these treasury bonds, and what do you benefit out of this? One is income. That is the overall secure streams of income. I did mention that bonds, they pay interest or a coupon after every 6 months, and then at the end of the maturity period, you get the principal. So it is a source of income in a way that you receive this interest semi-annually. Second is it is a safe investment. Why do I say so? It's you are guaranteed of the principal at the end of the period, because the government will not fail to pay the principal. So it is a safe investment. The third one is it's leverage. That is, you can use a bond as a collateral to secure loan. So you can pledge it as security to access a facility in a bank or any other lending institution. And finally is liquidity. So it offers liquidity since they can be sold before maturity. So remember that you can even sell this bond before it matures. You can do this in a secondary market. That is, you can sell, but now the price of the bond will depend on the market price at that particular period. But it's normally advisable to hold it until maturity. Now, I want to look at the risk involved in a treasury bond. One is default risk. What is a default risk? This is the inability of the issuer to settle the interest and the principal payment, which can lead to loss of investment. It is a risk, though it's a rare risk in investment of treasury bonds, because in most cases, the government normally pay off its debts before even settling any other obligation. So it's a risk, yes, but if you ask me, it's rare. We have market risk. Now, for market risk, the value of the bond can fluctuate depending on the effects of interest rates. If you can recall, CBK recently raised the interest rates by 75 basis points. That one, what does that mean to the bond? It presents either a gain or a loss. For this case, a raise of an interest rate also affect the value of the existing bonds. So it's a risk to the bonds you are already holding. So basically, those are the two risks involved in treasury bonds. Well, moving to the next, I want us to look at the bond prospectus. What is a bond prospectus? And I'm mentioning this because these are documents which you'll come across with in while investing on these treasury bonds, and you will find this mostly in CBK website. So it is a disclosure document prepared by the bond issuer that gives the details of the information about the issuer. For example, the coupon rate, the maturity date, etc. So it's a document which is it's found in CBK every time they issue a bond, and then the details are found in these prospectus. Now, when it comes to naming of the bond, for example, this one, IFB 2022/14, this is the issue number. So to break it down or to explain it, what this means is, first of all, the IFB, which is the first digits on these, the first digits and a letter, the first letters and a digit. It means that it's infrastructure bond, which is issued in 2022. This represents the year in which it was issued, and then the 14 here means the period to maturity. So this bond takes 14 years to mature. So simply, you will get this issue number every time you want to invest in a treasury bond. Now, so of course, 10 years for this issue is 14 years. The redemption date, which is now contained on this prospectus, is 27th of October 2036. Taxation, it is tax-free. I mentioned that treasury bonds, that is infrastructure bond, they are tax-free. So you will receive interest as it is. So then that is after every 6 months, the coupons are not taxed. But remember, this is issued on an ad hoc basis, unlike the FXD, which is issued every month. Now, the reduction structure, that is, you can invest anytime you want. For this case is 14th of November 2030. Yeah, you will get the 50% of encumbered outstanding principal amount. And then on 27th of October 2036, you will get the 100%. That is the final redemption of all outstanding amounts. 50% of unencumbered outstanding. This one means if your bond was not attached to any loan, then you will get the 50% of that principal amount. Now, I have used an example of an IFB. If it was a fixed coupon treasury, it would have FXD, this one, FXD1 2022 025. Still, FXD1 is the type of bond. Then 2022 is the year in which it was issued. This bond was issued in 2022. And then 25 is the tenure. So this one takes 25 years. Okay, now we move to tap sale. So what is a tap sale? This one is a procedure in which a treasury bond opens a sale of a bond that had already been issued in the past. The details of the bond remains as it is. That is the original value, the maturity, the coupon rate, but they are sold at current market price. So tap sale is issued when the previous bond has underperformed. That is, it didn't meet the initial capital target. We have had 2 tap sales for the present IFB bond, that is IFB 2023/17. It was first floated, and then it was reissued, or it was issued as tap sale, and then it was reissued again. I think the latest one, actually, it was the value was today, and the government wanted around 10 million. And then it managed to collect 5 billion. So it is issued when when it has not met the initial target set by the Treasury. So I wanted you to get the meaning of tap sale, because you might come across this term or even encounter during the investment of a Treasury bond. Now, I want to take you through Treasury bill. By definition, what is a Treasury bill? So these are short-term investment vehicle offered by government through CBK or our agents appointed by CBK. So unlike Treasury bill, it is short-term, and it has a maximum of 1 year. The minimum investment of Treasury bill is 100,000, which must be invested in denomination of 50,000. And now remember, Treasury bills, unlike Treasury bonds, it has they're issued in 3 tranches. That is, first is a 91-day Treasury bill. There is one in the 2 days Treasury bill, and 364 days Treasury bill. So you can choose either depending on your need and even your investment strategy. And unlike Treasury bond, they are offered every week. So this information, you can get it from CBK website. Now, Treasury bill you can purchase at a discount, meaning that the investment is lower than the face value. What does this mean? I've used an example that if you purchase a Treasury bill of 100,000, which is the face value of the bill, It has an interest of 9% per annum. So therefore, you will literally pay 91,000 at maturity, and at maturity you are paid 100,000. That is the face value. So that is the meaning of purchasing a treasury bill at discount. You pay less than what you will receive at the end of the period. So that is by and large the definition of treasury bill. And if you noticed recently, the rates for treasury bills of it has shot up. I think around the latest one actually is at 10% for all the 91 days, 182 days, and even the 364 days. I think investors now are moving towards short-term investments, and therefore it's becoming lucrative because of the interest it's offering now. And remember again, what is making the interest rates to go up is there's a high demand from the government for these investments. Now, what are the benefits of a treasury bill? One, it is secure, just like a treasury bond. That is, it's your principal investment is you are guaranteed of receiving at the end of the maturity period. The chances of losing the principal, it's minimal or even none in treasury bonds or treasury bills. Now, second one is it offers short-term investment. This is ideal for someone who wants to invest in short-term. And I can use an example of, let's say you have some cash, you want to pay school fees in 3 months. So the best way to save this money or to keep it is to invest in treasury bill for a period of 3 months. So it offers a short-term investment for your money. The last one is it has attractive rates. I mentioned that treasury bills currently run at 10%. So it is attractive compared to any other type of investment. So it is quite lucrative for someone who wants to invest. Now, I want to compare the treasury bills and treasury bonds so that you know the difference. Though I've mentioned during the presentation of the two. One, for treasury bills, it's they are short term. That is a 91-day treasury bill, 182 days treasury bill, and 364. So treasury bill doesn't go beyond 1 year. Now for treasury bond, it's a long term. That is can take even 5 years and above. It can go even up to 30 years, 20 years. Second is treasury bills are sold at discount. That is, what you pay is less than what you receive. You'll receive the face value, which is a higher amount than the invested amount. For treasury bonds, they are fixed interest payments till maturity. So they pay a fixed interest or a coupon until the bond matures. Third one is treasury bills are sold at primary market. What is a primary market? To break it down or to explain what it is, primary market is the first issuance. For example, when CBK is issuing the bond, that is a primary market. Now, when it is sold now by investment, the investment managers or even the brokers, then that is a secondary market. So for treasury bonds, they can be bought at both primary and even the secondary market. And finally, the investment amount for treasury bills, you invest invest a minimum of 100,000, while for treasury bonds, it's a minimum of 50,000 except for infrastructure bond, which has a minimum of 100,000. That is IFB, I did mention. How do I invest in T-bill and T-bond? Now you've known the definition of a treasury bill and a treasury bond. Now, how do you move now from there to invest in these assets? One, you'll need what is called a central depository for securities. That is a CDS account, which is maintained at CBK. Remember, this is different from CDSC account, which is a Central Depository for Securities Corporation. This is an account maintained by brokers for you to purchase shares, and it's I've said it's maintained by brokers. Now, what are the requirements for opening a CDS account? To open a CDS account, there are 4 steps. One, you need to complete a CDS account application. This is normally referred to as a mandate card, which is a form issued by CBK. So to get this form, you drop into any of the CBK branches, which is it's available any of the weekdays before 2 p.m. So you just drop into any other branch and then obtain the form, and then you now fill it in. The second one is you need one recent colored passport size photograph. This one, it needs to be stamped by the banker. And as we proceed, I would also like to request you to mute so that we can have, yes, thank you. So you need a passport colored photograph size. And then this is stamped by the banker. So you take it to your bank so that they stamp at the back of that photo. And remember that you should not staple or glue this photo to the card. The next step is you need the original and a clear copy of your ID, or identification document, that is a passport or even an alien certificate. So have it with yourself, the originals, and even the clear copies. This one is needed at CBK, and remember they will retain the copies. The last one, which is the fourth step, is the signatory. That is your banker should witness and confirm your signature on the mandate card. So he or she should stamp and sign on that card. So the reason why this is stamped by your banker is, remember, this account will be linked to the account you're opening at CBK for the CDS account, because this is an account whereby the interest or the coupons will be transferred to once the maturity date is realized. So remember to have your banker to stamp and sign and confirm. Now we move to how to purchase, or how do you buy these treasury bonds and treasury bills. Now, there are 2 ways you can purchase. One, you can either purchase it directly with CBK, and this can be done manually or through CBK TMD, that is the USSD application. I'll explain more about this CBK TMD. The second one is through approved investment companies, that is commercial banks, can be non-bank financial institutions, or even licensed investment advisors. These investment companies, remember, they charge you some management fees, which could be a portion of your investment capital. So this is how you will be able to purchase your treasury bill, either directly or even through investment companies. I want us to look at steps to follow when investing through CBK. Now, one, you need to check the treasury bills over on the CBK website. Remember, CBK normally auction these bills every week, and they paste it on their website. So if you want to invest in treasury bill, you look at what they have on their website, and normally they paste the previous performance or the results of the previous auction. So you will be able to note as well how the previous one performed. Step number 2, you need to select a treasury bill of your choice based on your preferred investment period. So there are 3 options now here. That is the 91 days treasury bill. We have the 182 days treasury bill and the 364 days treasury bills. So these the CBK website has a listing of the upcoming offers, as I mentioned. And take note that it takes time to check previous auction, which gives a good guide on the kind of return to expect. So you look at the past performance so that it can even give you a clue of where it is heading to or what to expect in terms of the returns. You move to step number 3, which is make an application to invest. So after you've identified the instrument you need, that is if it's a 91, 182 or 364, you now move to investing on these products. Now, this is done through completing a treasury bill application form. The application form, you get it again on the CBK website. Then step number 4, that is getting the auction results. That is the CBK Auction Management Committee determines the cutoff rate and the successful weighted average of the accepted bids after considering all the bids. So this committee determines the cutoff, and then the results are published again on CBK website. So you should check on this website and make sure that you make the payment before 2 p.m. the following Monday. And if Monday is a public holiday, then you have to send money the following day. So this will be sent to you on an SMS to your registered mobile number. And to note is the auction committee decision is final and cannot be contested. That is the decision of the management committees cannot be challenged. Once they've decided on the rate, then that is the final rate which will be used for that particular offer. Step number 5 is making the payment to CBK. So the payment period for the bid closes the following Monday before 2 p.m. So, and note that you can be barred from future investments in government securities if you fail to make the payment by deadline. So if the offer has a deadline of, let's say, today, and you fail to make a payment, that is a default, and you can be barred from bidding in future. So ensure you check on the CBK website the status of your bid and make the payment on time. Step number 6 is simply receiving your money. That is, you'll receive the face value or amount in your bank account that is linked to your CDS account at maturity. I mentioned that earlier that when opening this CDS account, you need to have the card stamped by the banker. So the CBK will link this account to the CDS account. So at maturity, you receive the face value of the investment. Now, if there is an option of rolling over the principal, and this can be done. So if you decide to roll over the investment, then it will remain until the next treasury bill or a treasury bond bid. Now, your interest will be sent to your bank account if it's a treasury bond. So if you give rollover instructions at the beginning of the investment through the application, then it will remain in the account until now you bid again for a treasury bond or a treasury bill. Now, I want us to look at Treasury Mobile Direct, that is the CBK TMD code. Now, as you have seen, this process has been largely manual, but now CBK responded by launching the USSD mobile application, which make it even easier and faster to make this application. And you can invest in treasury bond or treasury bill anywhere, be it your workplace or your home, at the comfort of where you are. So it is simply a USSD platform whereby you dial the USSD code and then invest. So what is a CBK TMD? It's basically a USSD application system which enables CDS account holders to, one, purchase treasury securities, that is treasury bonds and treasury bills. You can also check your account balances by dialing *866#. That is the short code on the mobile phone. So this makes it easier for even someone who doesn't have a smartphone to invest on these treasury bonds or treasury bills. Now, when your CDS account is set up, and then you will receive, CBK will send you a text message on your registered mobile phone. This is to notify you that the CBK TMD code is now ready ready for use. So when you dial this number, then the interface will recognize you as a CDS account holder. So basically, that is what CBK TMD means. I would like us to take a short break so that we can, when we resume, we'll move to how to purchase these treasury bonds, stocks, treasury bills using a TMD platform. So I would like to take 1 or 2 questions and take a break. And then we resume with how to purchase this treasury bond. So let me get your reaction on what we've discussed so far, and we can proceed to the next one. So anyone with a question?
Yes, John, we already have quite a number of questions, and I appreciate that you are taking us in a very basic way that everyone should be able to understand. I presume that. And as we progress, Christine, you can check. I saw Enda Muihaki was saying that she was being unable to join from the side of the emails. Maybe you can see if you can be able to help her, or maybe she succeeded. But as we wind up this session, John, number 1, there is a very basic question that you spoke some jargon here. When you are introducing yourself, we are not able to interpret that you have some titles, ACI, okay. TDPK, SFI. Please speak in a language that we can all understand.
Thank you, Irene.
Then we can handle a few more.
Thank you, Irene. Well noted. ACI is it's an operation certificate issued for Treasury back office staff. It basically entails the treasury bonds, treasury bills, the operations, the settlement process, and even the reconciliation. So it entails the treasury instruments. For TDBK, this is a Trustee Development Program Kenya. This is a course for trustees. Irene, you are aware about this one. It's a mandatory course for trustees, and I undertook this when I was a trustee to Bank of Africa. For SFI, this is a Sustainable Finance Initiative course. It talks again about the financial instruments and how to invest, and even in majorly how to deal with the financial instruments. So basically that is what ACI, TDBK, and SFI, Irene.
Yeah, thank you so much. You know, sometimes we can speak a language that is so into our professions, and we have a mix of professions here. Thank
Irene,
you for that.
You can hear me?
Yes, you're good.
Okay, so we can move. What was the next question?
So we have a couple of other questions. Someone is asking whether treasury bills are taxed, and then going as per the example that you showed in the presentation, will I receive 190? I think that should be 190,000 at the end of the period, or the government is going to deduct some amount. The next question is also about taxation on the interest of the treasury bills and bonds. On the final interest that you earn, are they taxed? Then there was the example: if I deposit 50,000, how much interest will I earn at the end of the 3 months? I think we are looking for some math here, John. Then again, the other question is about taxation. Can one trade individually? So I think let's look at what interest or what profits are we looking at. Maybe you can do maybe 1 or 2 examples, and also you can handle the question of taxation, and then we can answer 2 more and we proceed to the next one.
So thank you, Irene. So yes, in regards to taxation, treasury bills are subjected to withholding tax, that is 15%. So yes, you will receive the invested amount less the 15% tax. So for every investment amount you do, you will subject it to 15% tax. So if you invested, for example, I mentioned 100,000, which is a face value at 9%. So the interest will be subjected to this. I wish I could calculate this or left, but basically it's subjected to 15% withholding tax, and this applies to all the bills, the 182, the 92 days, the 182, and even the 364 days treasury bill. So yes, it is subjected to tax, unlike now the IFB, which is an infrastructure bond. So taxation also applies to treasury bond, that is the FXD. Irene?
Sorry, I believe that is clear that yes, it is subjected to tax, that is 15%. And then someone is asking, can one trade individually without necessarily having to go through brokers? And then another person asked, can investment companies refuse to invest your money and use it for, of course, for other reasons when you choose to go through investment companies or brokers, as we call them? And then there is a question of what is the difference in terms of benefits when you purchase as an individual or when you go through an investment partner like brokers or banks. Then the final one on that note is which one would you personally recommend between the treasury bills and the treasury bonds when you're looking at the risks and the returns, especially as it were where we are today? Which ones would you advocate for?
Okay, so thank you, Irene. First of all, there's a question of either investing individually, that is like directly with CBK, or investing it through commercial banks or brokers. One, yes, you can invest directly, that is by opening a CDS account with the CBK, or you can invest indirectly through licensed commercial banks and licensed investment brokers. So you can choose either of the two, but remember, if you invest through investment managers, there's a fee charged to your portfolio. But when you do it directly with CBK, then there is no charge involved. And then the second part of the question is, what do I personally recommend to invest in terms of treasury bonds and bills, looking at the interest and the risk? I would answer in two ways. One, to invest in treasury bills, it depends on the risk of the investor and even the need. You remember, treasury bonds are long-term investments, while treasury bills are short-term. So if you want to invest in short-term, then I would advise you go for treasury bills, which can take less than 1 year. If you want to realize the money before before the year elapsed. So the best one to go for is treasury bill. But remember, again, the shorter the period, the less the interest, while the longer the period, the higher the interest. So when deciding, consider the two. In terms of interest, treasury bonds pay higher interest than treasury bills. Consider as well your need. Do you want to maintain this cash for a long time, or this investment for a long time, or for a short term? So, and I used an example of if you have some cash now and you want to pay it, pay a school fees in the next 3 months, then the best, of course, is to go for treasury bill. So that is how I can answer the question of advising which one is the best investment for someone. So look at those two perspectives: your need and even the yes, Irene.
Thank you. I want to request Susan Maina, kindly mute your microphone. Susan Maina, kindly mute. We are trying to avoid muting everyone so that we don't interrupt the flow of the class. Thank you so much. John, a few more. Can I buy bonds using my company, and can I move to individual account later? And also someone else asked, can we invest as a company or as a group? And then someone asked, can I move from one investment company to another? What is the process and what will I require? And then, is the interest rate for treasury bill or treasury bond fixed, or does it vary? And the other one was going back to your profile, John, that you mentioned that you about Marine Corps, whether you previously served there. I was reserving that question, but it has come anyway. Then if I opened my account long before the TMD was introduced, how do I now apply to be enjoined? And is it possible to invest from diaspora? Very important questions. You can handle that, and then we see before we transition to the next presentation.
Okay, so thank you, Irene, and I appreciate that people or the attendees are developing an interest on these investments. One, looking at the first question, whereby you wanted to know whether you can invest as a company or as an individual. Yes, you can invest as a company, but you need to open an account as a company. It can be a company or a joint account. You can invest again as individual. So if you would like to invest on the two, then you'll have to open a different CDS account in order for you to proceed and make investments. The process of opening an account through investment brokers or investment managers, it will, unlike the investing directly with CBK, basically CDS account, it's held at CBK. So what the broker or what the investment manager will do is to take your details and open for you what is called a nominee account, which is again domiciled at CBK. So you can open any account either directly or through a company. And remember, you choose registered investment managers to assist you in opening this CDS account. This can apply mostly for someone who may not have time to personally visit CBK and undergo the process of opening the CDS account. But yes, the companies will assist you in opening the CDS account. The requirements is basically the same. You'll need, of course, the KYC details, your KRA PIN, you have the passport, and even you need to have your ID copy or even the passport copy. There was a question of, sorry, I might have lost some of the questions. There was a question about my introduction. That is where I mentioned that I worked with the NATO military base in Afghanistan. Yes, that was my first career in 2012. I worked at the military base in Afghanistan for 2 years. I was working as civilian, and I was working for a company contracted by the military to provide logistics within the camp. And basically, I was working as administrative assistant at a US military base. So yes, I was working as civilian, and of course, learn about the survival skills and even how to defend yourself in case of an attack. And finally, on the TMD, if you previously opened an account and you don't have the TMD, this one can be done by visiting CBK, and you can ask them to enable you to open the CBK TMD. Remember, they need to register your phone number and link it to the CDS account. So you need to present yourself personally and register your phone number. This will now enable you to trade using the USSD code. But you need to visit CBK to register your phone number. I believe that is the last question, Irene.
Sorry, John, I'm not sure you answered whether it is possible to invest from diaspora. Somebody was asking whether it is possible to do a real calculation, assuming that we have an example of 10% interest on T-bills. We'll see whether that will be possible. If not, then we can follow up with that question with John or myself. And then somebody asked, can I change bank account mainstream before maturity, e.g. if a bank goes under or for any other good reason? So if you move from the bank that you presented before the maturity of your investment, and what is the procedure? Then somebody say, I applied for an infrastructure board, 100,000 on tap sale, but I was told I would pay almost 100. Why was that? And then how does the withholding tax affect the filing of the employment tax returns? That is now when we come to filing returns. Yes, we will share the recording on our YouTube channel or at Hallmark Institute of Professionals. And then the other question was about the interest and the taxation. I think we've handled that. Yeah, I think you can respond to those few, John, and then we move to the next, and then we keep them coming, and we will respond as we progress.
So thank you, Irene. And starting with the question on diaspora, yes, it's possible for you to invest from diaspora, and the requirements are, you need to, I'll do a summary of the requirements needed for investing in diaspora. And it is basically, you need to fill in the form, that is the account opening form, which you will get it again from the website. You need to send now the documents physically or it can, through DHL to CBK. And you will need to do what is called indemnity, so that they can indemnify the bank from issuing instructions through email. But the documents are required to reach CBK through DHL. And the process of opening CDS account applies. It is only that you'll have to send the documents directly to CBK through DHL. You will need, as I mentioned earlier, you need to fill in the mandate card. You need to fill in you need the passport copy and the passport photo. You will need the photocopies of these documents, and it has to be certified by your banker. So diaspora investors can send their instructions physically, through DHL to CBK. There was a proposal by CBK, and I think this is underway of allowing the investors to invest or to open this account and invest without physically going to CBK. And if that come in place, and then it will be actually easier for even the investors in diaspora. But for now, you need to send the documents to CBK. There was a question of if you change the bank in between, you've already applied for, or you've already invested in a treasury bond or treasury bill, but now you've changed the bank, and someone mentioned that if a bank goes under, what will happen? If there will be any change of your account details, then you need to notify CBK, and you'll need to physically appear to give the instructions to CBK on the change of account number or any other account details. So you need to present instruction to CBK notifying that you are changing your account number from this and this, or any other detail you need to change. About the last question, I didn't get quite clearly, Irene, but I think it was about the withholding tax and the returns. I'll calculate this one at the end of this presentation, and clearly indicate how much it will be taxed and how much you will receive at the end of the investment period. Irene?
Thank you, John. There is a question I think that I would also want us to handle at the end, as Penina was asking, comparison between saving in treasury bills and bonds versus SACCO. I think that one we will handle that at some point as we progress. But John, before we transition, Sisi Wandera asked that they had invested some 5 years ago, and can they use the same account to invest, and what is the process, and what are the incidences when you can lose money on treasury bills or treasury bonds? And the question of I know you had mentioned one of the risks. So at what point do they become unattractive? And then the question of, do I have to monitor my treasury bills all the time, or should I wait for the maturity date for the interest and principal to be refunded to my account? And this is good, John, because I see these are some of the investment opportunities that we are looking at right now, especially also, like I had mentioned, considering the economic environment that we are in right now. As you handle that, I think the rest we will handle as we conclude.
Okay, so thank you, Irene. Someone mentioned that he or she opened an account, a CDS account, I think, for investing in treasury bonds like 5 years ago, and can he or she is asking if he or she can use the same account to invest. Yes, it's possible to use the same account, provided it is still active But if it's a dormant account, then you need to reactivate it again through CBK. You don't need to open another account. You will still use the same account, but make sure it's active. If you've not been trading through that account frequently, probably it has gone dormant and you need to reactivate that account again by visiting CBK. Now, on the risk of treasury bills, I mentioned that the treasury bills, they are subject to the market risk. That is, if the interest rates changes, and then it affects the issue on the rates for treasury bills. This normally happens when the interest rates are raised. It normally goes hand in hand with the economy. If the interest rates are higher, that means that the economy is not doing quite well, and the government wants to attract the investment on these treasury products. So the interest rates for the bill as well will go up, but it will affect the existence of it will affect the rates of the existing bonds. Another one is default risk. I mentioned that default risk is the inability of the issuer to settle the interest and the principal. That is a risk to treasury bill, but I did mention that in very rare cases that you see government defaulting on the payment on the principal and the interest, because one, they normally settle the obligations first before settling the expenditures. So basically, those are the two risks involved in treasury bills. Irene?
Yeah, thank you, John. And I think we'll transition. I've seen another question that was talking about the broke government and the risk that comes with it, whether then they would be unable to pay. I think you've handled that in the same question. And so as we transition to the other presentation, we want to appreciate our supporters or our partners. As we mentioned, we have Tibu, which is a mobile health provider that can come to your office and offer the services of a health provider within your office or within your home. We have Sky and Beyond, which is a company that provides diversity of services. We have CPF, which is the county pension fund. We have BF Suma that deals with medical products, or do we say supplements, and health products. Then we have NWealth, which is an administration company for pension schemes. And then, of course, we have the Passion Biz, which is one of our partners in terms of mentorship. And of course, this program is fully on a big percentage is sponsored by the Hallmark Institute of Professionals, which is a TVET college. We offer academic and professional courses. We also offer short courses, 3 months programs. We offer corporate trainings, which are short trainings, which go for around 3 to 4 days. And we are also very keen on the developing of the society by giving back, by offering such trainings, as well as consultancy is one of our key, our heartbeats. So feel free to check us out. If you have young ones who need to join college, please consider us. If you have grown-ups who need to improve or up their professional career and career paths, we have some professional courses like the CHRP, which is for HR professionals. We have CPA courses and many, many other programs that we offer. So we welcome you to check us on the website. You can check us on our Facebook. We are on all the social media platforms. So with those many ones, John, I suggest we move on to the next presentation, and then we see how far we can go before we run out of our scheduled time. Remember, this was supposed to run between 8 to 9:30. John.
So thank you, Irene. We want to proceed to the next one. summarize how to purchase treasury bonds using TMD, and so that we move to the last topic, which is equities. I'll try I've seen several questions on the chat box, and I'll try to answer that maybe at the end of this presentation. So Irene, the steps of using CBK TMD. One, you dial *866#, then you enter your PIN, and then you see from this, I have tried to snip what happens when you dial that USSD code. The third option is select the option that is option 2, the auction bid. In that platform, you will have, you have the balance, that is the balance inquiry, the auction bids. It will also show you the bill and the bond, my account, the rollover, and the exit. You move to step number 4, that is select the security type. There are two. You can select if it's a treasury bill or a treasury bond. You move to step 5, which is select the security on offer. If it's a 91-day or 182-day bill or 364. The next is you select the amount, that is the amount you would like to invest. Step 7 is enter the rate for your bid. And if you want an average rate, that is you are not bidding competitively, then you just put 0. And then finally, step 8 is confirm and send. So it will show you these details, that is the issue number, the amount, and the rate. The rate is average if you earlier put 0 in it. Then you press OK, and your bid is confirmed. Now, so basically I've summarized that. You can now, proceed to make the payment, and you can do it through any direct deposit at any of the CBK branch. You can do RTGS, you can do electronic funds transfer, EFT. You can also use check, and even you can even take the cash to CBK. Now, if you are applying through CBK, or if you are applying through a bank transfer, you need to indicate the account number. That is a virtual number. You need to, when you're asked about the reference number, you need to indicate your CDS stroke the portfolio number as provided by the CBK. So this is an example of how you will quote your account number. So when you log into your CDS account, you'll be able to view the credit of what you've transferred. Now, the next one is why invest in treasury bills? The importance, the benefits of these treasury bills. One, it's a diversification of your portfolio. You don't want to put all your eggs in one basket. You diversify so that you minimize the risk of losing the invested capital. Number 2, T-bills are low risk investment. As I mentioned earlier, it's you are assured of getting back the principal at the end of maturity period, and they are generally considered as low risk investments in Kenya. Number 3 is the capital preservation. You want to preserve your capital due to inflation. The last one is there are no management fees. That is if you invest directly. If you invest with the CBK, there are no management fees. For treasury bills, you cannot invest in secondary market, so you invest directly with CBK. There are no management fees. So these are basically the importance of trading in treasury bills. We move to the next slide, which I think someone asked about treasury bills being taxed. So are treasury bills taxable in Kenya? Yes, it is subject to 15% withholding tax. So you receive your money less 15% of the withholding tax. Remember, CBK is an authorized agent for KRA. We have a quote here that from Warren Buffett, that is, today people who hold cash equivalents feel comfortable. They should not. They have opted for a terrible long-term asset, one that pays virtually nothing and is certain to depreciate in value. So basically, if you are holding cash, it's depreciating in value. So the best way to save is to put in an investment, either through a T-bill or a treasury bond. Now, I think we've covered most of the questions, and we'll respond as well to the question on the charts. I would like to move to the last one, which is equities. And I'd like to share the slide for equities. So I'm trying to share my screen for equities. Just a moment.
So as John does that, I think somebody was asking, can you invest in both treasury bills and bonds using one CBS account? And then there was confirmation whether 15% taxation is on the interest. Yes, that is on the interest. And I like the point at which you have concluded, John, on the quote about the people who like holding cash. And I think this is the one of the reasons why we are having this conversation. Instead of they normally say keeping that money under the pillow. I don't know whether that still happens, or in that bank account where it keeps diminishing because of the administration costs. Then treasury bills, treasury bonds are some of the opportunities that are available for us to keep that money for an interest and some benefits. Saying this as we give John the time to share the screen.
So thank you. Yes, Irene, you asked a question that is it possible to invest in both treasury bonds and treasury bills in the same CDS account? Yes, it is. When you open a CDS account, these are accounts for both treasury bonds and treasury bills. So yes, you can invest any at any given time. What you cannot do is to invest in equities, that is shares, because you will need a different account altogether. So that it's possible to do both treasury bills and treasury bond. So we can proceed, Irene. So I hope my screen is visible.
You're good.
Okay, so just a moment. I am unable to move my slide on my end. Trying to fix. Okay. So, okay, there you go. So this is the outline of this presentation. We look at the definition of shares, the benefits of owning shares, the risk of owning shares, the corporate actions, the primary and the secondary markets, and the trading process. So we want to look at what are shares, and the shares are basically the ownership of a company. And when we talk about shares, it's basically you will hear mentioning shares, equities, and even stocks using the three names interchangeably. It basically means the same thing, that is owning a part of a company. And they are classified into two, that is the ordinary shares and preference shares. So just as the name suggests, ordinary shares, it doesn't have any preferential right. Unlike for preference shares, this one has special rights. That is, for example, when the company is winding up, then the preferential shares holders are given the first priority in the payment of their share capital, while the ordinary shares will receive what is called residual rights. So they are given the rights for the preference shareholders comes before the ordinary shares. We like to look at the benefits of owning shares. What do you benefit from owning the share of a particular company? One, it is dividends. You get dividends through that is the profits declared by the company. The second one is the right to vote. That is you get the right to vote by owning a share in a particular company, because you'll be required to attend the annual general meetings. The capital gain. What is a capital gain? It's a change of value or the increase in value of your assets. So you benefit through capital gain, and this one is realized when you sell the asset. The preemptive rights. What is a preemptive rights? These are rights, is a special right which is given to shareholders, existing shareholders, to purchase stocks if they are issued before being issued to others. So basically, those are the four benefits of owning shares. I want us to look at the risk involved in shares. One is a liquidity risk. This one is the ability of the issuer to pay, or to even to pay the shareholders. The issuer risk. This is the risk, the insolvency risk of the issuer. Foreign exchange risk, which is the change of the currencies due to inflation or due to change in the currency rates. The price and the market risk. Second is the next slide is the corporate action. That is, these are actions which are done by the company which can affect the shareholders or even the creditors of the company. One is dividend. That is the payout of profit. We have what is called a bonus, scrip, or capitalization issue. These the existing shareholders get extra shares, but no payment. We have stock splits. That is, you can split the number of shares into smaller shares for it to be avoidable. And then the reverse stock splits, which is now consolidating the shares, unlike the stock splits. The company meetings, which is we have AGM, which is an annual general meeting. The EGM, which is these are extra general meetings. These are the kind of meetings held by the companies. We move to the capital market. So what's a capital market? So basically, this is a platform whereby the buyers and the sellers meet to exchange the capital. So they are divided into two. One is primary market and secondary market. A primary market is this issue the new shares for the first time. They raise capital and even match the surplus funds to investment opportunities. The secondary market, on the other hand, is they allow primary market to function effectively and even facilitate the two-way trade of securities. So it supports the primary market. For example, I mentioned the issuance of Treasury Bonds. It is when it is being issued by CBK, that is a primary market. And then secondary market is now when it is availed by the investment managers or the brokers And this one, it offers you a second chance. If you bid the primary and you never you are never successful in the bid. I want to look at the trading and the settlement process. It starts with the client, which is yourself, if you are trading on these shares. So the client here makes the application for opening of the CDSC account. You can place an order, fund this account, you withdraw from this account. We have the broker here, which now opens the CDSC account for the client. They participate in the execution of the orders by the client and also get a read-only access to CDSC trade. So here brokers can even communicate directly to CDSC. We have the NSE, which is they host now the trading platform, that is the Nairobi Stock Exchange. They offer the platform for trading of these shares. CDSC account is, the CDSC is basically the depository system which reflects the client holdings. It is it's a Chinese wall among the brokers. Chinese walls here means it was a term used to portray the Chinese. It was a Chinese wall which was used to protect the enemies during the ancient time. And finally, the CBK, which now helps in the settlements of these the broker commission and the rest. So basically, this is the trading and the settlement process. We start from the client all the way to CBK, who does the settlement. Now, the settlement cycle. This one takes one to that T, there's a transaction date with the trade date plus 3, which is now, so the settlement date basically is a T plus 3. So if you initiate transaction on Monday, then Tuesday will be T plus 2, Wednesday T plus, Tuesday T plus 1, Wednesday T plus 2, and Thursday is a T plus 3, which is now the settlement date. Second last year is the transaction charges. Remember, there are small levies on these transaction on shares. We have here the NSE levy, CMA. CMA is just Capital Markets Authority. CDSC, which is Central Depository for Securities Corporation. Transaction levy, CMA Guarantee Fund, CDSC Guarantee Fund. It charges a portion of the investment and even the stamp duty. And finally, here is there's a quote by Warren Buffett. That is, I will tell you how to become rich. That is, close the doors, be fearful when others are greedy, and be greedy when others are fearful. The most important quality of an investor is temperament, not intellect. So I would add by saying you purchase when everyone is exiting, and you sell when everyone is coming in. So basically that is what equities entail. And I now welcome your question and answers. I welcome your questions, and then we go through the whatever is in chat box. Irene?
Yes, John. We already have questions that have come through. There is one that had been asked earlier. I think I'll recheck it. But when and how do I sell once I have bought the bills and the bonds? That was still on the Treasury bills and the bonds. And can one invest in a way to earn every month? Bandu, talking about the bills and the bonds, as I recover one of the questions that they had been asked and not answered.
So thank you, Irene. The question is, so when and how do I sell the bonds and the bills? One is once you purchase a treasury bill, this one you cannot sell it until it matures. You will wait until the maturity of a treasury bill. There's an exceptional situation called treasury bill discounting, but it is highly discouraged. And when you sell this treasury bill, the CBK over punitive rates, so that it discourages the selling of treasury bill. But basically, most cases, treasury bills are held until maturity. For treasury bonds, this one is very easy. You can do it through secondary market. That is, when you want to purchase, to sell your bond, and then you float it to, or you offer it for sale through a broker who now link you with the seller. So for treasury bond, yes. And the price for this treasury bond depends on the market price at that particular moment. So you can sell treasury bond before maturity. Now, can I invest in a way to earn every month? Yes, you can do what is called bond layering. So bond layering is, I've mentioned that treasury bonds, they pay interest after every 6 months. So you can select treasury bonds, which if you select 6 of them, and then it's layered in a way that it will earn you, each of them will earn you interest after every 6 months. So you will basically earn from January to December, provided that you layer your bonds in a way that both the yields are getting the interest from January to December. This one you can be assisted to layer your bonds through investment managers, or you can even select a bond yourself, which can pay from January to December. So it's layering of bonds. You can purchase 6 different bonds and make it in a way that each and every one pays interest from January to December. So I think that's the last question you asked, Irene, unless there is any other question.
Yeah, so John, and I think this is quite related to, I know people are asking, should you go through a broker or an investment company, or is it okay to go it alone? And that brings us now to the other question that I was tracking from Dorcas, who was asking, does one have to monitor their bills or bonds every time, or at the end of maturity, their interest and principal will just be deposited into their account? And I think, John, as you wind up, you can mention the, why is it important that we go through investment advisors, brokers, and the experts that are basically in the market doing these things. I've heard you now introduce the aspect of layering, and unless somebody really wants to, go to another level and become an expert in a way, then that's where now the experts are coming in. Maybe you can mention that as you wind up, and also tell us whether you would be available to work with individuals who are ready, because I believe some of us are ready to action.
So thank you, Irene. So investing through registered investment managers or brokers, this is quite advisable because these are the experts in the industry. So it's advisable, especially for beginners. If you are starting to trade these instruments, they can assist you in even looking for the best bond to purchase, or the best treasury bill to purchase, or as well which can suit your need. These are the experts who can take you through the types of bonds which are available. They can show you even how to earn your interest after every the 6 months. They can show you when and how your bond will mature. So Yes, I do recommend that you use a registered brokers to open these or to purchase a treasury bond. But better still, you can still open these accounts directly with CBK because it doesn't have any charge. And as long as you can monitor the issuance of the bonds through the CBK website, I mentioned that they auction every month for FXD. For IFB, they auction it once in a while. Treasury bills, they are auctioned every week. So if you choose to invest directly with CBK, then make sure you check their website. If you use these experts, and then they will be now advising you on when to invest or the best rates in the market. So it basically depends on the person preference, but each and every has its own its own strength. On the last one, that is the interest and the principal. That do I need to keep or to monitor? This is what happened to these instruments. Once you purchase a treasury bond, and then after every 6 months, then CBK will credit your bank account. Remember, I mentioned earlier that you need to link, you need to have a bank account so that you open a CDS account, because your banker will need to stamp on this card. And then, so after every 6 months, it is credited for treasury bill as well. When it matures, and then it's credited to your bank account, not unless you issued a rollover instructions, which now you can now keep the money in the CDS account until you bid for the next bond. So I saw a question. Someone requested for my contact. Yes, I can provide my contact on the chat. And finally, I think that's the last question on that chat box, Irene. So Irene, if you can hear me, I think that's the last question. So as I wait for Irene, I have seen a question on the chat box that is, how much can I start with? For treasury bills, you need a minimum of 100,000. Recording in progress. And for treasury bonds, then it's a minimum of 50,000. Unlike for treasury, the IFB, which is needs a minimum of 100,000. So moving to the last one is so I've answered what is the least amount I can start with. So, and the last one is someone is saying thank you, very enlightening. So thank you so much. I think I've lost Irene. I don't know if we have Christine online so that we can conclude.
Yeah, I'm back.
Oh, so thank you, Irene. I was answering the last question, which someone asked about the least amount you can invest, and I've mentioned for treasury bills, it's 100,000. Treasury bond is 50,000, but IFB, the least you can do is 100,000. So basically, that is the least you can invest. So I think, Irene, if there is any, I think that's the last one, unless there's any other question.
Yeah, I think we can leave it at that, John. I hope I'm audible.
Yes, I can hear you, Irene.
Yeah, then somebody had asked that you could share your contacts. I don't know whether you're able to share that on the screen or.
Yeah, sure. That's I can share My contact is, let me see if I can project on the screen. It was on my first slide about treasury bonds. Let me pull up this one and then share.
Yeah, so as you do that, I think our participants, thank you so much for joining today. I think we went to a point where we were almost full house, but as John shares his I can see his email address there and his number. And in case you are not able to reach out to him, we are always happy to connect you with the experts that can hold your hand in different ways. Just to mention that at Hallmark, we have a page. I shared the invite to join if you're willing, or if you're not there, where we have, we do life skills trainings. And for me, I believe this is one of them, that it attached to financial wellness and financial freedom. If you remember the last time we handled something to do with social security, we've also done a training or a session on pre-retirement planning. And so remember, I normally say retirement, our life starts at retirement, but only if planned for. And this is one of the ways we can be able to enjoy our retirement if we are able to diversify our investments and be able to gather in returns from diversity of channels in as far as income is concerned. So if you are not on that page, feel free to join so that you can get quick updates on what will be coming up next, because we are very passionate about financial wellness. And so we will be bringing us more about opportunities for investments, because we are saying again, let's spread our eggs and not put them in one basket. So thank you so much for joining. And once again, our facilitator and our pilot for the day, John, we are so very grateful for your time and for agreeing to give us your, the expertise that you've gathered over the years. We don't take it for granted. And so we just want to say once again, we appreciate. For the rest of the participants, I normally say from where I sit at Hallmark, Irene is my name. I'm the principal as well as the managing director for Hallmark Institute of Professionals. And I not only look for students or learners, I also look for trainers, for consultants, for facilitators. So if you know there is an area which you're very good at, we are glad to give you a platform and an opportunity so that you can share that knowledge with others. So feel free to reach out to us. You can call the office lines, you can reach out to Christine, you can reach out to me, and we will be glad to hear what you have. So other than that, I think it's a blessed night. We can close it and say we have achieved much, but we will not have achieved until we have implemented the things that we have learned. I'm seeing a lot of compliments on the messages. And so thank you so very much. Let us follow up with John. Let us follow up with myself and with Hallmark and see how much more we can be able to achieve and attain our financial freedom and financial wellness. Have a blessed night. I declare you're blessed and highly favored as you work hard. May you be fruitful, and may your seed continue to multiply even as you put it in the right places in Jesus' name. Amen. Have a blessed night.
You too.
Thank you.
Thank you, and have a blessed night as well.